Hi everyone, this is Vivek here. I was dreading and I was talking to all of us कि lunch के बाद का session कैसे करेंगे, but अब लग रहा है कि अभिषेक आचार्य के बाद का session तो कोई फायदा ही नहीं है करके. We will be 1/10 of it. The other thing we were trying to do कि हम सब panelist अभिषेक आचार्य के session में आ जाएं on the stage. I think most of us have come by manifestation or by effort. Now, thank you everyone for waiting for us. I think we have a very exciting discussion right now on Bharat and how insurance is getting distributed across India and Bharat both, especially using NBFC as a channel. We've got a very esteemed panel, people from across different ticket sizes of the NBFC segment, right from MFI, which is the lowest ticket size, to MSME, to the housing finance, so we're covering across. And we've also got expert on manufacturing, Nalini, who's agreed to save me when I forget anything. She's going to step in. The way we'll do it is, we'll go by the smallest ticket size of a loan, which is MFI, and we'll go from there up to the housing finance. And I'll moderate the panel accordingly, and then we'll follow some questions and open up in the end for you all. Maybe I'll start first with MFI, where typically the ticket size of loan is 20,000 rupees, maybe starting from 10,000, going up to 30, 40, 50,000. And we'll first focus on that, on where insurance is embedded in that journey of MFI, how it has played out over from 2010 till today, and where do we see the journey going on over the next 10 years period of time. Maybe I'll start first with Anand. Anand, if you have your mic, yeah. So maybe Anand, who is the MD at Chaitanya Finance, Microfinance. Anand along with Sudip, who is the chairman of Inditrade Group. And we've got Arun also with us, who is part of CreditAccess Grameen, who heads strategy and innovation and analytics over there. Maybe we can have a conversation on that, and especially how MFIs have evolved over from 2010 to 20 and going forward, and how insurance has been embedded in that journey. Maybe we can get all three of your views on it. Sudip, you can start. Yeah.
Thanks, Vivek. I think this is a very, very interesting area. And, a lot of things have happened over the last 30, 40 years since the economic opening happened in India. But even today, about 40%, you take your guess, between 30 and 40% of Indian population doesn't have any form of insurance. And believe me, with a 140 crore population, that's a huge, huge number, which is absolutely not yet covered by insurance. Now, if we have to get to this, missing middle, as it's called in the, common parlance, there is absolutely no other way than to, work through the microfinance industry. Because this is one industry, this is one business where the participants are going to the absolutely, not included section of the population in financial market, which is the women who are predominantly in the rural and semi-urban areas. Now remember, by definition, Indian microfinance companies by and large have been lending to women. And these women are in villages and semi-urban areas. Now the opportunity of, educating them, opportunity of giving them insurance product is huge. But the challenges are also huge. Obviously because, the lack of awareness, the financial wherewithal of these people, and also, to an extent, absence of the appropriate product does hinder that process. Microfinance industry has been doing quite a lot in this space. They have been the vehicles through which insurance companies have been going to these neglected section of the population. But I believe there is a long, long way to go still. I leave it to Anand and others to comment on that.
Yeah, thanks, Sudip. Just to give you an idea, I'll give you a more ground level view. For you, as Vivek said, microfinance is small ticket loans. And one of the, I think, things that differentiate the industry is that we go very often and meet the customer. And as Sudip said, these are women borrowers. And what you can, the first question that comes to mind is, do they see a need for need for insurance? This is important because there's always a feeling that, at least I don't come from the insurance sector. Is insurance a product that is pushed? Is there enough pull from the customer. I've been in this industry for the past 13 years, starting, Chaitanya as a small entity. And what keeps coming back is that today, although we bundle the most basic product, the credit-linked insurance, it is almost given that a customer wants it because what they see is, in that segment of the population, death is, there. You can see that. And every time, because, we go there, the money comes back to them when it's either the spouse or they pass away. There is so much of trust in the whole system today that I think it's become a part and parcel. Now the industry, to just give you an idea, over the last 10 years, it's grown at a compounded rate of maybe 25-30%. Today it's a 3.5 lakh crore industry, one of the largest asset sizes, something that 10-15 years was not very large, and it's expected to go to at least 10 lakh crores. That's the potential it has. And with that, the micro insurance, if you can call it, has also grown, hand in hand without much of an effort. So that itself shows that how it's been a success story in our own journey of growth. And one simple data point we keep getting is, see, we are well regulated by the Reserve Bank of India. Customer, services is a very important part. And when you look at our customer complaints, right, what we see is, I'm telling from my company and also the industry association, most of the customer queries or complaints are related to insurance. That means insurance is, they need the insurance amount that has to come quickly, but it doesn't come on time. And we've just focused on that. And when you do it quickly and do it, even now the tax, the turnaround time we have, I think it's not very good. It's around 30 days. Because you have to get the death certificate, and then, I think the insurance companies have done a great job. They turn around in, I think, average is 5. I think they turn around in a day or two also today. I think it's more in the way we can get the certificates. And the day we reduce the TAT, the customer complaints have come down. It clearly shows that the requirement of insurance is there. And of course, as you said, there's a long journey now. After the micro insurance, you have the other parts. Maybe Arun can take it from here.
And Arun, also you can maybe focus on the scale itself. We had Mr. I think one of the panelists before that was saying you have to give people a taste of insurance. I think microfinance has done that beautifully, where they've given a taste of insurance such a wide audience in India who would have never got insurance at all. So,
yeah. So just to add to what Anand said, see, in terms of the scale, we probably cover about 6.5 crore customers today in the microfinance sector.
Wow.
Now, I'm now talking broadly about the sector itself.
Yeah, industry.
Now, coming to Grameen and being one of the largest players in this sector, see, while we cover close to 4.5 million customers, probably the amount of live policies and the number of insurance policies that we administer is upwards of 1 crore.
Okay.
Right, so that's just one
player, 1% of
one player who's administering more than 1 crore insurance policies at any given point in time. And I've seen this change. I've been with Grameen for the last 13 years. So I've seen this significant shift in the sector at the time when we really used to struggle to get the right kind of support, the right kind of pricing. So year on year, the first 3-4 years at least, if my memory serves me right, there was significant struggle in getting the entire journey of starting from. It's not too difficult to kind of embed that into the credit link program, but the entire journey of claims. Anand was mentioning TATs. TATs used to be upwards of 90 days to settle claims. 10 years back. From there. Even though 30 days seems a lot for most of us, I think in this industry, I think 30 days has been a very, very significant improvement from where we were earlier. And again, a lot of it has to do with the kind of documents you get, the kind of challenges you have. And to that extent, I think most of us, I'm sure Anand can also add to this. Most of us in the last 5-6 years have also invested it to some extent on some or the other technology, because you imagine 10-12 years back, most of these things were getting handled on Excel sheets, right? So you would just have all these claims, I mean, not just claims, even the policies itself being tracked on Excel sheets. So if a customer calls, if somebody's scrambling in the head office. So from there now, almost everything is almost as seamless as how our loan journey happens, where everything is available quickly at the click of a button. The person who's taking the call from the customer can figure out, how many policies are live, what is the amount to be claimed, how much gets settled as part of the loan. So all these are enhancements and improvements gradually over the last 5-6 years that have happened, to a point now where I think the credit-linked insurance part is fairly well matured. Having said this, I think where most of us today clearly see a need, and which we are still, I would say, experimenting, or we're still trying to figure out the right kind of products for these customer segments, would be on the non-life products. So I think a lot of us have tried out health related products, and the experience there has always been very mixed, because as a principle, at least in Grameen, we always make sure that this is something that we do not just bundle simply with a loan and you just sell. It has to be something that customers opt for. Right. And the minute you go down that path, then getting the pricing, getting the the kind of appropriate service, because then unlike life insurance, with all these other products, you cannot have these kind of tax, you cannot have these kind of, any kind of a service issue, just completely breaks down the trust. And the thing is, while we keep talking about last mile, Bharat, etc., we have to bear in mind that the loan officers that we have are also coming from the same community. Insurance is not a product which is very easy for our kind of employees to sell. So it's different when you sort of do a credit-linked insurance, but for any other product, whether the loan officer is the right person to even make the sale, explain the features to the customer. I mean, it takes me time to understand most of the product's features, right? So to expect that during a center meeting, when he's meeting them for 15 minutes, half an hour, to be able to convince a group of 15-20 women on the nuances of any policies, it's a very sort of a
So education is,
and that's really the one area where I think as an industry, we probably now need to evolve.
Got it. Sudip, yeah.
Anand is absolutely right, and Arun is absolutely right, and so is Anand. I just want to develop on the point which Arun ended with, that it's very difficult today for the microfinance employees on ground to sell anything other than credit life. They are probably doing a little bit of health, and that's where they are. But if you look at it in isolation from outside, that these are the people who are interacting with that segment of population, which also needs multiple other things. Let's say the same women who we are lending to has livestock. Now that livestock needs insurance, because tomorrow when the flood comes and the livestock gets destroyed, her livelihood disappears. Maybe she's into agriculture. Now there's a crop insurance. So the challenge is to work with the insurance companies, evolve a model, maybe some kind of embedding, some kind of other structure, whereby these insurance are also given. It's very difficult for a microfinance company with its existing set of employees in the present construct to sell those policies. But somewhere, who else will do it? How will insurance companies?
Because we are the last touch point.
We are the last touch point.
Got it.
There's no solution. I don't have a solution to give right now, but some solution has to emerge, which will ensure that we are doing the right thing for this population.
No, and maybe I'll pass on to Nalini, because you are the supplier of solutions. So yes. Let's hear your view on this. I think they are complaining about you now.
Yes,
so
of course, on behalf of the community of manufacturers, I think it's my, it's onus is on me to respond to the queries raised. So I think I've just summarized what was discussed is that one is awareness. Second is the right product, and third is the affordability, and last is the claim process. How can we simplify the claim process? So when we talk about awareness, today most of the insurance companies, they cater to the middle class, upper middle class, urban people. So the entire communication is in English. And for microfinance companies, I think vernacular communication is the most important thing. And like Sir rightly pointed out, that the employee is, the skill set is to give microloans and collect the installment or the EMIs. But we are expecting him to sell an insurance, and insurance is a complicated subject. And if any insurer comes and tells you that everything is covered under my policy, he's lying to you, because insurance is a contract. So there are certain things which are covered and certain things which are not covered. So at Digit, what we do is that we have these, small videos we make, which is around 60 to 90 seconds, and it's in various vernacular languages like Tamil, Kannada, Telugu, Hindi. So around 9 vernacular languages. And this 90-second video talks about what is covered, what is not covered, and things you should know, like, for example, health, what is a pre-existing or a maternity. So this 60 to 90-second videos have really helped us to create that awareness, and it empowers the last mile, communication with the customer. When we talk about the product, what people generally do is that I have a product, I'll try to sell it, same product through across all channels. I want to sell the same product, health product to microfinance companies, through banks, through my agency channel. But, we really need to curate the product. And I think the regulator has done a great job. He's allowed use and file. So I can create the product and start selling it, without any approval. And if there is any reservations on part of the regulator, he comes back to us post facto. So I think from that perspective, there is a lot of flexibility to co-create products. I think you said that the onus is on us to provide the right solution to the customer. Affordability, the premium needs to be palatable. Instead of giving a 8,000 rupee health insurance, can we look at giving them a monthly health insurance plan of 300 rupees, 500 rupees, because the cost of hospitalization is very low in tier 2, tier 3 cities. But the product and the kind of product we are selling and the pricing is for an urban, somebody who lives in a city like Bangalore or Calcutta. So customization of the product for microfinance is very important. Lastly, on the claims process, there are a couple of things which delays the claim. One of them being, KYC. Because when the loan is processed, they give, maybe a ration card which has Nalini V, and then when they make a claim, they give a voter card which will say Nalini Venkat. Now, as an insurer, I am stuck because the name is not matching. So what we have done at Digit is that we said that since you already have the KYC, so we do not ask the customer to provide the KYC, we take the KYC from the microinsurance company. So that reduces a lot of TAT. The second area where we see challenges in claims is the bank account. Because the premium goes because of Jandan, there is a lot of penetration on the bank account. But the bank account details, sometimes these women don't have access to that. The bank account is not activated. So these are few challenges, but I think as the financial inclusion in India is growing and digital payments are penetrating through the country, these challenges will be short-lived.
Got it. No, I think bringing down TAT as we work more and more, I think that will also increase the circular reference customers trusting insurance more. Maybe I'll move from MFI now to the next segment, and I'll involve now Manish, who heads Poonawalla Housing Finance. Along with, I'll get Sudip also involved, and I'll get Souvik also from Protium to on. MFI insurance has been a 10-year plus journey. But when I look at affordable housing finance, when I look at MSME loans, when I look at other segments, I think insurance is more a 3 to maybe 5 or maybe even a 3-year journey of either attachment of insurance or selling insurance to your customer segment. So maybe would you want to just give that journey, and maybe Souvik, you can start. Yeah.
So actually when Suryendu and Neil called me, I was really surprised ki insurance ke I have never done insurance role, but I think it's a very thoughtfully selected panel. So I'd like to break it up into 3 parts. So I have been doing this for about 25, 27 years now. Where we were, where we are, and in my opinion, where we should be. So if you see in the early 90s or maybe mid 90s and so I started my career with commercial vehicle finance, जहाँ पे insurance करना मेरे लिए ज़रूरी था because
Protection of NPA.
yeah, if something happens with the commercial, so Manish sir was my senior in Citibank when we used to push the customer. However, insurance sale was not important from a bundling point of view, but it was more because of my protection.
So credit cost reducing
Exactly,
your
because
credit.
if the vehicle goes for an accident, I don't know what to do.
How will you get your money?
I don't know what to do because he's going to
Finish.
lift his hands and say, "Because I can't pay you." So at that point in time, first year insurance, then second year insurance, then third year insurance, it really used to be a problem. And हम छोड़ देते थे कि second year, third year नहीं आता तो कोई बात नहीं. Although the systems had flagging off.
All the red flags were there and there, but
Yeah, but नहीं करता था वो because typically the large customers used to say कि boss मेरा तो overall I will not do a comprehensive insurance, I will do a third party because comprehensive insurance will cost me so much, and even if I have 10 vehicles going for full loss, I still save on the insurance cost. So that was the problem that we used to have, and at that point in time I think insurance was not privatized. So the government entities were also I'll say not so well entrenched into the ecosystem. But having said that, and that was the only form of SME lending by NBFCs those days. Because और कोई NBFC SME lending नहीं होता था. But I think post that in the next 10 years, the industry really evolved when actually SME lending started happening. And SME lending, when it happens, you are typically doing, so unlike microfinance, these guys are a little more banked. They are little more up on the credit cycle. So typically what happens is these guys are aware that insurance is required. However, which insurance they are not sure.
was there ticket size? What loan ticket size?
So loan ticket sizes would be typically anything from a 10 lakh to a 5 crore.
So
a typical,
bit matured then.
Bit matured, yeah. These guys have balance sheets. They file ITRs. They broadly understand what
so they know
banking
insurance,
is all
but
about.
they don't know.
They know insurance, but they don't know what insurance they require. One, and they're not sure whether they actually require an insurance or not. Having said that, where we were or where we are is at this point in time, about 5 years back, I remember when I used to review the team, because insurance, the good thing is now insurance is become a very important product for NBFCs because the payouts are good. Let's face it. Okay?
It hits your bottom line and shows.
Yeah, of course. It's a bottom line. It's a fee-based income, infinite ROE. So from that perspective, I think it has become important for the NBFCs also to push this. Primary is the primary concern customer insured hai ya nahi hai? I don't think so. But having said that, insurance hai uska ki typically life based hai.
So penetration rate has increased. You are saying in
So
MSME
penetration
also.
rate in the last 5-7 years, so I remember 50% penetration rate we used to be very happy about. But now the penetration rate has gone up to more than 80-85%.
So 100 loans you've given last few days, then you will want 80% to have insurance.
No, there are 2 points to this, Vivek. One is 100. If I have given loans to 100 people, am I insuring all those 100 guys? Number one. Number two, if I have given 100 crores worth of loans to those guys, am I covering the entire 100 crores? So these are two different problems to handle. Okay. One. Two is typically the SME guys till date are first generation guys. Okay. Now they will be 50, 55, maybe 60 plus. So insuring them also at times becomes a problem. Yeah, because either the premiums are high or the insurers are not willing to insure them. And if it is and you have to understand, for an NBFC person, his primary job is to sell a loan, not an insurance.
Not an insurance.
Okay, but he has to sell an insurance because uska boss nahi to marega usko. He might not get his approvals in place. One, two, and three is, for him it's easy to sell because if the loan size is say 2 crores and the premium amount is say 5 lakhs, वो बोलेगा बस 2 करोड़ के साथ 5 लाख और लेंड कर देता हूँ मैं आपको,
205
क्या फर्क पड़ता है आपको 200 रुपए एक्स्ट्रा इंस्टॉलमेंट पड़ेगा. So that selling is, so he's not selling.
It's on invisible selling almost.
Correct. So he's not selling keeping in mind the efficacy of the insurance as a product. He's selling the insurance because he knows कि boss ये बिकेगा तो बाकी सब कुछ ठीक ठाक चलेगा. And the customer also says कि boss 5 lakh रुपए एक्स्ट्रा है दे दो यार, लोन तो मुझे चाहिए. Again the push-pull thing that Sudip sir just said, the push-pull thing, because this is a
Correct.
pull and that's the push. Okay, so that is where it is. Now the problem is today's day the sales guy is not selling the insurance keeping in mind the efficacy of the insurance, I think that is somewhere we need to really work together. I don't know how we are going to work together, because the sales guy doesn't understand that. One. Two is, we can be a delivery mechanism. We can't be experts in both.
You can't be experts in both, yeah.
We can be a delivery mechanism where we can be able to reach or bring your product to the doorstep of that guy, but to make him understand why he requires it, what kind of, it may be कितने सारे credit में बिकता है, credit link बिकता है, life बिकता है, health बिकता है, motor बिकता है. But there are a lot of other insurance that you can actually sell, which that guy requires.
Shopkeeper insurance से लेके.
It can be anything. It can be shop, it can be cattle, it can be travel, it can be property, it can be commercial, it can be anything. But I think that is something which we are missing.
So more products.
More products and across the age groups. So I had a case where this guy had filled up the form and did everything, paid the premium. The premium was in the insurance guy's bank account, but he had not done a medical. And it was denied. So now my sales guy will say, sir, hum to nahi bechenge. But I know it's not his problem. I know it's not the insurance guy's problem. Agar medical nahi. So if we can find out something to address these kind of problems, it is still, so let me put it in one word. It's still a bundled product. It's still not an embedded product.
It's a bundle product.
It's a bundled product.
Not embedded.
Because दोनों एक साथ मैं बेच रहा हूँ. Because मैं बेच सकता हूँ.
Embedded,
It's
there's
still
a
not
pull
an-
also.
Yes, it has to be, he has to have requirement for both, or at least he has to understand the efficacy of both the products.
Manish, if I can come to you, given you have seen Souvik, you were his boss also. So from your perspective, especially with Poonawalla, where, you know, the ticket size was pretty large pehle, right? From now you've come down to the 10 lakh rupees ticket size. So you have seen both the journeys of higher ticket size to a lower ticket size and more micro loans. So as we were chatting in the morning, that first thing is that obviously to protect the loan, we take a 50% of the loan value as the property value as LTV, and then we do a protection cover on that. Maybe you want to just walk through that journey for everyone, and then how do you see that progressing? Where is the attachment rate going? How do you see if that customer segment, do you think behavior is slightly different from the MFI and the MSME customer segment, and you think some green shoots are there for us to address some of these questions?
Thank you for having me over. Very eminent panel, very lovely listening to you all. If I can just reflect back a little and look at the landscape, I think if you step back and take a larger view, I think one of the things is that all of us are extremely proud of the fact that we are the world's 5th largest economy. And it's the PM's mandate that how do you become the 3rd largest economy? And the gap is about what? $500 billion. Right? And yeah, so that's a gap really. If you really size it up, it's about $500 billion. So it's very important that these discussions some way contribute to the larger agenda. And if we really size up our GDP and we look at the current GDP per capita has seen a phenomenal increase. I think from $1,200 to $2,200 per capita has just about happened in less than a decade's time. Moving from here to $3,000, I think is something which possibly can even happen in 5 to 6 years' time. The very important aspect to note is that the debt per capita is about $1,200, round about that kind of a number. And in our country, if I'm not wrong, the insurance per capita is just about $100 per capita. If I'm not mistaken, life is around 70 and non-life is around 20. What it means is that when compared to other developed nations, we are about 1/30th of the size of what the possible insurance penetration could be. And if I'm not mistaken again, that insurance penetration in our own country is barely 4%. If I contrast this on what we are experiencing on the ground, is a massive phenomena of urbanization. About 30 kilometers of road construction per day. The theme of this session is last mile insurance connect. But there is a last mile actual connect happening. Every time there is a Lucknow to Sitapur to Lakhimpur Kheri, there is a road or there is a development which is happening. And it's for real. Today we have 1.5 lakh kilometers of road constructions and still a massive amount of connection which is happening. On top of it, we have brilliant one of the world's best. We have skipped the desktop and we have a mobile connectivity. We've seen fintech loans done a phenomenal job, what credit bureaus did a long time back. The fintechs have done, now the insurtechs have come, the wealth techs have come. Now what does it really mean? What are we seeing on the ground? We are seeing a lot of customers who are addressing their need first of roti, then kapda, and makan, along with makan insurance. If you look at the hierarchy of needs, insurance by and large only begins to come as when your disposable income begins to rise. The point I'm trying to make is that with every increase of GDP per capita, the ability to get insurance done is only getting higher. And how experiencing this on the ground? I think we do long tenor loans, and our long tenor loans also need long-term insurance, which means our insurance penetration is 100%. We don't do a loan without insurance.
So you don't give only if there is?
No, we don't. We don't even touch.
Okay.
It's important for a customer to be insured, and it is not about because we just want to sell a loan and get done. Because if the prime mover does not exist, so घर वाले बेघर ना हो जाएं, इसका कदर है हमें. We kind of really worry about that. So it's a stated theme that forget attachment, forget mathematics. You take care of the consumer. So in most cases also, even if there is a shortage of loan and there's a widow, we tend to write it off so that the family is...
The house is not...
The house is there, there's a roof over the head of the ones who remain. So it's very important to know that the loan is long-term, and we do a long tenor loan as well, and we do 100% penetration. And what we are observing is that our business used to be barely 1,500 crore around 6 years back. We've been growing at almost 30% CAGR. We are at now, 7,000 odd crore, around about that. I mean, we will grow at 30% for next 5 years. We have field teams. I mean, just to tell you that we are a team of around 1,700 field sales officers on the ground. And I'm reasonably sure that we meet possibly at least 4 to 5 customers per day, which makes it around 10,000 customers per day. In a year or in a month, we meet 2 lakh and 25 lakh customers. The point is that out of 25 lakh customers, we barely will be able to give loans to 30 to 40,000 customers. There is still such a large number of customers which we meet on the ground, which the fintechs don't. What we have is relationship, we have belief, we have trust, and what the fintechs or the techs have is a lot of customers.
Touch point.
They have gotten the customers, but how do we deepen them? I think the game will change very significantly from competition to collaboration, and how do we mine into each other's intelligence. The only point is that we don't only have to worry about portfolio health, we have to also worry about customers' health. If both are healthy, I think we both can thrive. So I think that's the way I would like to talk about this.
Super. Maybe, Sudip, we can get your views also on this, given you straddle both. Yeah.
Thank you. I think both Manish sir and Souvik, absolutely right. But I'd like to raise a different point, which I was trying to point out even when Arun was talking. We all in the NBFC microfinance sector, we are trying to cover the customer to the extent of the loan we have given. And this is all linked with the loan. So we are protecting us. I mean, that's what the bosses will tell, so that the insurance is given. But my point is, we are interacting with a segment of customers, whether it's in microfinance or MSME lending, where they are less than very sophisticated. Let's put it this way.
Correct.
But they need a lot of insurance. They don't know that they need the insurance. Insurance companies want to get that. To Manish sir's point, that 4% penetration, how will it go up? How will the insurance pie go up? And it's not about selling a FMCG product, which they may or may not need. Insurance they actually need. Insurance is an actual need, but people don't understand that. Now, I strongly believe that there is a need for insurance companies. It's much beyond what Nalini you mentioned, to play a role, hand-holding role with NBFCs and microfinance to sell other insurance products. As I gave the example for a microfinance, we are protecting the life of the borrower and his spouse. If something happens, the family is protected, we are protected. But look at what the guy is what the lady is doing with the money. She is probably buying some cattle or some livestock or doing some agricultural activity or something. Now that also needs to be protected. Can we do some embedded product there? With an MSME loan, beyond asset and beyond property, as Manish sir said, is in a way is easy because you have a tangible security. But when you give unsecured loan, which is also a very large segment today,
how do you
beyond ensuring the life of the borrower, you need to have some other insurance which is insuring his business, maybe his shop, maybe his some other activity. So somewhere this needs to come out. And I think that is the role we in the industry need to play along with insurance to ensure larger penetration, maybe embedded, maybe bundled. We have to figure out.
So Nalini, while you answer his point also, maybe also you can throw some light on the entire MSME segment itself is very, very young in my view from both insurance perspective and lender perspective. It's a 5-7-year-old industry. So from a lens of Go Digit and manufacturer, how do you see evolving within your system also?
Yes. So I think I completely agree with the view that, today, like he mentioned that the purpose is to take loan and insurance is incidental to it. So the customer thinks that मुझे loan चाहिए, insurance भी खरीद लूँगा. That is the attitude.
लेना ही पड़ेगा type.
Yes, that is how today insurance is, positioned in financial services. But as an insurance company or as the manufacturers, I think we need to change our strategy from a product-specific approach to a customer-specific approach. So today we have a product and we are trying to sell this to various customers. Rather, we look at what is the customer's need and rework on the product construct, one. Second is significantly simplifying the terms and conditions because, I have heard people say that जब insurance खरीद रहे हैं तो सब कुछ covered है, जब claim कर रहे हैं तो कुछ covered नहीं है. That's how people define insurance.
Correct.
But I think it's very important to simplify our terms and conditions. It should be easy to understand and easy to communicate. So today, consumers, whether it's a micro finance consumer or MSME or affordable housing, they all buy insurance products, especially two-wheeler. Every house today has a two-wheeler, whether it's urban India or rural. Two-wheeler loans, when microfinance companies give income generation loans, they have cattle or they open these small shops. So shopkeeper insurance is very low penetration in India because the average ticket size is 7,000 rupees. Now, how do you sell a 7,000 rupee product to a microfinance customer or an affordable housing customer?
7,000 is the premium, you're saying?
Premium. That is because the cost of acquisition is very high for an insurance company. So I think digitizing the process is the answer. So we need to ensure that the cost of delivery of the service needs to be reduced drastically. And for that, digitization will definitely help. I'll give you one case study of shopkeeper insurance. Today, we are the largest shopkeeper insurance because we work, insurance providers, we work with Paytm, PhonePe, because they have a merchant network. We work with, many NBFCs where we offer, who offer unsecured business loans to shopkeepers. The product ticket size is 1,200 rupees.
Oh.
From 7,000, we've got it down to 1,200 rupees and we pitch it like 100 rupees per month. And this is palatable for the customer. The second thing we do at the time of claim is that we use digital process. Because if I have to process a claim of 50,000 or 70,000, I can't hire a surveyor and pay him a 10,000 rupee fee. So we do the entire claim process digitally. So this has helped us to reduce the cost of delivery of the service, thereby reduce the premium ticket size and increase the affordability in the market. So he was talking about cattle insurance. One of the biggest challenge about cattle insurance is identification of the cattle. So for that, now if I have to get a vet to go and do the piercing, or if I have to do an RFID, it takes time and claims become very complicated. So we are working with companies to have an app with muzzle recognition. Will your credit manager be able to use a simple app, take a picture of the cattle, and then the identification is done? So I think digitization is the answer to affordability, digitization is the answer to simplify the process and simplify the product. In affordable housing today, because we have a product-specific strategy of distribution, you go to an affordable housing customer and say, आपको life insurance खरीदना है, आपको fire insurance भी खरीदना है क्योंकि घर का insurance करना है, आपको health insurance भी खरीदना है, they'll say मैं एक ही insurance खरीदूंगा. They don't want to buy 3 insurance because they don't understand the difference. Neither the guy who is selling it understands,
Nor the buyer.
nor the guy who is buying it. So we need to have a customer-centric approach and tell him that this is one product you have to buy and we are covering all the 3 aspects or maybe most of the aspects.
So single sale, you are saying?
Absolutely. Need to simplify the documentation. So he's already stressed that he's signing so many papers where he does not have any capacity to, there is no, the knowledge asymmetry is so high in financial services, the guy is just signing the paper without understanding. And on top of that, insurance companies make him sign proposal form, consent form, good health declaration form. The guy is lost. So I think simplification and digitization should be the way forward.
I'll pass on to, yeah, please, yeah. And then I'll come to Arun after that.
I think one very vital point which Nalini just mentioned. Just to tell us in our sector, one interesting thing happens is that people take loan for 20 years, but the loan does not last for 20 years. So what happens that over time, you see the actual life of loan is different from the contractual life of the loan. People take 20 years loan, but they end up paying between 5 to 7 years time. So what really happens is that your loan falls, the rate of loan, the principal outstanding also falls every year. Your income keeps rising. So the ability to serve more for us is to give extra loan or top up and therefore try to help the customers basically do basic things like what I just heard Nalini mention. That for example, to begin with, you have not given him a health loan, but there's Ayushman Bharat scheme. There is something which you can work on top of that and treat our 70,000 customers, hopefully becoming a lakh of customer end of this year, as one family, as one cohort, because the demographics of India are still 30, 31 years. And let's understand there are 1 crore customers who do not have homes. And even if they take 10 lakh basic ticket size loan, and you cover 50% of that, there's a 5 lakh crore opportunity in affordable housing alone per se. If that is the size of the opportunity and you start with a basic insurance and then we can treat this customer as one segment, because for our employees, we have a different health cover. But for our customers, I've been talking to people, understand them, meet them, comprehend our customer base, and see if we can really bring out something which is in line with a group thinking, because if you can look at the cohort and work out something specific, I think our ability to kind of collaborate and serve our customers only can get better.
So the cost also goes down and adoption
Absolutely, and
also
we have acquired, we have relationship, all it just needs is a great product, serviceability, create your help desk within your institution so that if they are not well, do cashless, offer good hospital connections. I mean, they will really value this, the genuine care. If it comes beyond of chipcoing a product, I think that will be very helpful.
So just to add to what he was mentioning is that today there is a loan process or a process followed by the financial institution and there is an insurance process. Now we need to integrate that process first. Second thing is that there is a lot of data available with the financial institutions and insurance companies trying to collect data and do an underwriting on that. So that is a lot of friction in the system. So we need to have a mechanism to leverage the data available with the banks and financial institutions and use that to create cohorts and thereby giving the products.
I think just one point I want to touch. I think she's made a smart point on saying this is something that happened in the banking industry some time back. When do you move from transactional banking to customer banking? Relationship banking. So I think that is one very smart point where the product has to be customer specific and not product specific. How you do that is obviously something which we need to all sit together and do it. Having said that, some amount of work has happened on the consumer space. I have a 1-year travel insurance, which was never heard of.
কখনো ছিল না
কখনো ছিল না. So it's a 1-year travel insurance I have. So whenever I have to travel abroad, it's taken care of. So that's a good thing. Secondly, some of the companies I have seen, I don't exactly remember, they are fusing products, health, life and motor, health, life and property or something like that. But having said that, in the SME space, that work still needs to be done. Maybe it is more complicated and more complex than what we normally, because he might have different, the actuarial, the risk,
maybe different.
People will be very, very different. But I think we need to work on that and move to a customer-specific product rather than
a distributor. And I'll ask Arun to give his views, and then we have last few minutes, so I'll open up for questions. If there are no questions, then I have one question. Yeah.
Sure. Thanks, Vivek. So probably just to give a perspective on from a microfinance sector point of view, right? I think almost everything that you have said applies even for microfinance. In fact, why microfinance or microcredit has even scaled in this country is that we were able to create a model which is different from how people like us bank with a bank, right? The way we get a loan. So the product itself in many ways has been customized for the requirements of the customers. So understanding and putting the customer first and then curating the product rather than treating them, the entire microfinance market as just one homogeneous market is one important thing. Second, I think you mentioned friction. Absolutely, the entire journey of onboarding customers or selling insurance to them has to be frictionless. And I think that's one space where already obviously a lot of the insurtech partners, people like Zopper, are working with people like us to see how it can be done in a very seamless way. But I come back to the third and the most important part, which is finally all of this works when the service is good.
The claims and the time.
And the focus on that part of the journey has to be absolutely as important as how frictionless we make the sale point. I think these are the limited points I want to make. Thank you.
Super. No, I think we've covered. We'll open up questions. If there are any questions to the panel over here. Yeah, we've got one gentleman. If you can pass on the mic. We've got one more here. Two questions, please. Last two. There's a timer here which keeps on telling me there's no more time left. So, sorry, I'll put you on the pressure. Yeah.
Thank you. Good afternoon, everyone. Now, this question is primarily for Nalini, Venkat. So, is it like, have you considered, bundling parametric solution for the individuals at a ground level to be given, like to farmers or, business owners? A lot of the times it happens that, the loans that have been given, probably they are not able to repay due to the, conditions or circumstances which is beyond their control. Like climatic conditions are becoming a lot of, providing a lot of challenges. Just a thought of that.
Yes. So parametrics are available in India. The agri loans, which we see that most government organizations are offering, state governments specifically, are parametrics. So it is available, but it is a complex risk to write because of climate change. Whatever data we had for the last 30 years is almost useless now. We really need to, rework on the entire parametric data which we have right now. So to answer your question quickly, yes, it is possible, it is available. Why is it not popular? Because it is complex, one. Second is that as actuaries and insurance community, we are reworking on the risk model in the light of changes due to, global warming and climate change.
Yeah, please.
That's a good point. In fact, parametric is something that parametric insurance is something we as companies are looking at, because climate risk is a big thing, and we are looking at how to ensure our entire portfolio. Rather than making it customer centric, it's more
so group kind of for the entire.
Yeah, I think that's very actively something that we are exploring.
Yeah, and it helps the insurer also because there is no selection, right? So insurance operates on law of large numbers, and when a company like Chaitanya or Grameen, I know I already have the large numbers on my side. So the model becomes much more predictable for me, the risk model.
Okay, one question there.
Yeah, so as you guys represent the microfinance space, and the current insurance penetration that we observe as a manufacturer, I am from Shriram Life Insurance, which is restricted to a credit life kind of a ecosystem. What I request you is that, given an opportunity to all the manufacturers, if we start behaving like a bancassurance model, then that's going to be a great opportunity for all the 19, 20 insurance companies to work with you guys and penetrate further into the market, understanding that you guys have an amazing rural penetration and you have a good access to those customers. So if you guys start behaving like a bancassurance kind of a model, like a normal, banca space is working, so that gives us a great opportunity to build up that market, which is a substantial amount of market in the rural part of the country.
You're absolutely right, except the fact that I think as... Can you change your mic? You're absolutely right, logically thinking, but there are practical challenges which I think Arun, Anand were explaining, that the people on ground are not equipped that way. I think eventually that will happen, which is what I was also hinting at. Eventually that's how it has to happen, because some of the products other than Credit Life cannot be sold by the people today who are on ground. So we need a different set of people or a different structure, maybe some amount of digital intervention or other kind of intervention which will help in making that happen. But yes, some such thing has to happen eventually. Yeah. So that is exactly what has to happen. But the manufacturer has to pick up the cost. So there are challenges, because it has to make commercially viable for the manufacturer.
Absolutely, sir, because the tickets I see, the cost of acquisition is high because there are intense manpower deployment. Productivity is a real thing. So, digitization is the answer for that, because when you're distributing something digitally, you can scale it up very fast.
I think we'll wrap it up over here. I started with giving flying kisses. I'm getting a lot of brickbacks from that side. So we'll end the session here. Panel is available offline for as long as they have time for you guys to ask your questions. Thank you for being patient and not throwing stones at us.